In today's market update, I'm going to review yesterday's action and I'll give you what I think the market should do today and review a couple of other things I'm interested in to give you the Hawkeye perspective. One thing I want to point out is on the S&P, you can see that from yesterday I expected it to get right back up to 2,900. We were only 3.5 points short of that 2,900 area. I'm still expecting it to get over that. And I'm expecting at least one more price bar of push back up before we start to see some sort of a correction or maybe even a continuation move. But the thing I wanted to point out to you is the Hawkeye pivot. The pivot is the small yellow dot that you see here. This right here on the screen is a small dot that identifies isolated highs or lows in the market. This is a true isolated low, and when we see these pivot points, we expect to see 3 to 5 price bars of correction following them. So once this paints, we expect to see 1, 2, 3 price bars. So notice the size of the bars are decreasing as it goes up. The volume is remaining constant and it's white. I would expect to see green volume if this was a true reversal, a key reversal, i.e. And in this case, that's exactly what we had gotten, had a nice pivot low. We started to see a transition of volume at the pivot, so that was a key reversal point. And price not only went up 3, but it went up 1, 2, 3, 4, 5. So we always expect 3 to 5 price bars of reversal following. And then if the continuation of the volume and price support the move, then it will continue up. Notice that the tenor of the volume remained predominantly buying up until just recently when we started to see weakness coming in and then the sell-off in the past previous days. But price failed to create a new low based upon the location of the pivots, so we're expecting the increasing trend line to give us continued increasing prices until this price point is broken. If you take a look at the monthly chart, then you can see that once this final month closes out, you can see that we will have a true isolated high on the top, just like we did on the previous two. So the pivot will paint once this bar closes at the isolated high, and we would expect to see 1, 2, 3, 1, 2, 3, 3 to 5 price bars of reversal following that. And then in this case, if this is bar 1, then we would expect to see 2 or possibly 3 back down into 2,500 levels for the longer term. In looking at this and trading the action, we expect to see price continuing to go up. So if we went down into our intraday charts, we would look for the S&P to trade up. And based upon yesterday's action, we definitely saw that. We saw a brief correction at the open yesterday. As price continued to trade down pre-market, we saw a push down, liquidity hunt, trying to find information, and buyers trying to trap retail sellers in the market. So buyers are getting in at nice levels, and then the market continues to push up. One correction and then a continued push up to a key level of resistance where sellers start to step in, and at the end of the day, profit taking predominates. So from this level, you can see that Hawkeye cleared the way for an entry at this point. Prior to that, none of the volume or momentum gave us key entry points until we see right here. That's the first point where we can see a key level of entry. From that, based upon a specific risk level, we were able to take a 3 and 5 level profit targets off of the trade into the afternoon session. Thank you for your attention. If you need any more information on Hawkeye, then click the links below to get a copy of our free book or sign up for a 2-week trial of our software. You'll get 2 weeks free of our professional package so you too can see and analyze the markets the Hawkeye way.